So can you please tell me the difference between extension ledger and non-leading ledger?
So like non-leading ledger, it is used for each and every country-wise reporting purpose. We can use the non-leading ledger. So extension ledger, it is separately based on the client requirement. We can use an extension ledger.
Okay. So what kind of requirement? Like for every, even if you have to create a non-leading ledger, there would be a specific requirement, right? So what essentially distinguishes between the non-leading and extension ledger? There must be something, right?
Yes. Simply with the help of leading ledger, we can monitoring all the reports. We can generate the report with all non-leading ledger wise. We can generate the report with leading ledger, and the extension ledger it will we can use the specific requirements. So like based on the country wise, we have to submit the report. Then these kind of scenarios we can use the extension ledger.
Okay, fine. And how about the setup of posting period variant, fiscal year variant, and currencies with respect to leading ledgers and these extension and non-leading ledgers?
Yes. Posting.
Are those need to be same or they can be different?
Currency setups purpose, we have a different T codes. Like in SEC1, we can.
No. I'm not asking about that. Let's say your leading ledger is having 4 currencies configured. Okay. So is there a mandate to have same currencies in extension ledger and non-leading ledger, or you can configure your own?
Once again, please. Hello.
Yeah. I'm here.
Yes. So once again, please repeat. Like.
So what I was saying, let's say your leading ledger, which is generally zero ledger.
Yes, leading ledger.
It is having, let's say, 4 currencies configured for a company code.
Okay.
So is there a mandate in SAP that those 4 currencies need to be there in extension ledger created out of the leading ledger, or for a non-leading ledger which you would have created, let's say? So is there a mandate to have those 4 currencies, or you can define your own as well?
So as per reporting point of view, we can generate the different ledgers. If normally as per transaction purpose, we can use the non-leading ledger, and group level reporting purpose, we can use the leading ledger. So based on the report wise, we can use the different ledgers.
Okay, fine. You would have, let's say there is a requirement from a client. Okay. Let's say there is some balance available in a P&L account in year 2024, in fiscal year 2024.
Okay.
And they want to have the same balance reflected in that same P&L account in year 2025. So is it possible in SAP?
Yes, at the financial year ending March 31st, whatever the balances we have, everything we need to carry forward. Then automatically that balance it will be reflected in the coming year.
For P&L accounts as well?
Yes.
Okay, fine. Are you aware of currency revaluation process?
Yes, foreign currency revaluation. I have good knowledge. And
Can you briefly tell me how the foreign currency revaluation works in SAP?
Okay. So basically, foreign currency, as per part of business, we have a purchase and sales, everything. These transactions belongs to other than company code. Then we can, other than company code, this kind of transaction we can treat as a foreign currency transactions. And before post that these foreign currency transactions, we need to do some prerequisites like currency transactions and exchange transaction ratio. Transaction types and exchange transaction ratio, and day by day whoever maintaining the exchange rates, that is the requirement. Once these prerequisites completed, user level transactions have it will be happened. Then this is the foreign currency transaction. Coming to revaluation point of view, why we can use the revaluation means, once transaction is happened, these transaction relevant invoice relevant amount, either either after making the payment or before making the payment. This FC revaluation is the month ending activity. So why management requirement is there any due to the foreign currency reflections like dollar value increase or decrease, these kind of transaction effect, the document relevant payments are like vendor payment or customer receipts, is there any any reflection happened, like if dollar price is increased, vendor point of view we need to pay more amount. If dollar price is decreased, when customer point of view we need to we received amount less. Like it means due to the foreign currency transactions, how the business, how the purchase and sales relevant transactions affected. So these information we have to generate with the FC revaluation. There we have a two types of realized exchange revaluation and unrealized. Realized means only month ending point of view, only reporting point too. So once reporting generated, again next month first whatever we can fix the date, we can reverse the transaction. And realized means if invoice is generated, payment also completed. So these particular transaction relevant, if you have if you make payment, if you made any extra payment, or if you made any less payment, like vendor point of view, if you make more payment, like invoice value is 1 lakh, after payment we can make 1,05,000, that 5,000 we can treat it as a exchange loss. So if dollar price is decreased, we can make 95,000, so that invoice value it will be decreased, then we will get the exchange loss. So this is the process. This purpose we can create the different GL account, exchange loss, exchange gain, balance sheet adjustment account. Once the GL account created, and coming to configuration point of view, we need to create the accounting principles. Whatever the accounting principles we created, everything we need to assign leading ledgers, so like leading ledger, non-leading ledger, whatever. So then we need to create the FC revaluation method. So in this revaluation method, there is some required checkbox we need to activate it, like always evaluate, and if the when revaluation time it will generate the report, both GL accounts only it will display, so that we can select the SA document and here we need to activate bank selling rate, we can activate it. This is the method. So once valuation method created, then valuation area also created. Valuation area means on which area we can run the FC valuation, either company code currency wise, group currency wise, whatever. If you want to generate two currencies wise, we can create two valuation areas. So for example, valuation area we can create some XYZ valuation area. In that we can assign valuation method and company code currency. And if you want to use group currency wise, same valuation method we can assign another group level valuation area also. This is the valuation area. Then finally this valuation area assigned to valuation accounting principle. So this is the configuration. And whatever the GL accounts we created, everything we have to assign the we need to activate the we need to assign, like there we have a KDB and KDF. In ECC point of view, KDB and KDF, as per HANA KDB only we can assign all the required GL accounts. Like this FC revaluation mostly will done under the open item, like customer and vendor point of view, and account balances. So like whatever we can take the loans from different foreign bank accounts. So these three scenarios we can run the FC revaluation. So in KDB point of view, in KDB, once we can, so while we create the foreign currency loan account, we can create everything. So in KDB only, while we create, how system it will define the identify the revaluation in the particular loan account. There is a, we can assign foreign currency there we can define one key. That key will assign the GL master while creating the GL. And that is, and account open item point of view, customer and vendor point of view, here we can assign exchange loss and exchange gain and original balance sheet adjustment. 3 GLs account we need to assign. Coming to in realized gain and unrealized gain. So realized point of view we will assign exchange loss and exchange gain and balance sheet adjustment account. And realized point of view, unrealized point of view, exchange loss, gain and balance sheet adjustment account. And realized point of view will assign balance exchange loss and exchange gain account only. So whatever business point of view, how many reconciliation account we have, each and every reconciliation account wise we need to activate this GL account. So once this is completed, then user point of view, FAGL underscore FC underscore VL for the ECC T code, FAGL underscore FC is the new T code. Once user point of view, once user runs this FC evaluation, there you need to update the parameters like from date to date, or like vendor and customer enter information. Once user run the transaction, FC evaluation is completed. Entries point of view, like we have three types of entries, account balances and open item balances. Coming to account balances, if you are getting exchange loss, so exchange loss always comes under the debit only. If account balance point of view, if you are getting exchange loss, for example, when you are making the EMI point of view, dollar price is increased, then we are exchange loss will get at the time of payment. So exchange loss account debit to foreign currency term loan bank account credit to. If you are getting exchange gain, term loan account debit to, exchange gain account credit to. This is account balance of point 2. And open item balance of view, realized, unrealized. Realized point of view, unrealized point of view, balance sheet adjustment account it will be reflected. Unrealized point of view, original reconciliation account it will be reflected. Same wherever loss came, debit loss, credit side, these GLs it will be affected. So this is my knowledge. I involve last project in configuration also end to end.
Okay. Fine. From the AP and AR side, can you tell me what is the significance of baseline date?
Okay, while we are creating the payment term in OBB8, based on the baseline date only, system it will calculate the discount. So for example, invoice date is this month for 10th, this month 5th. Vendor provided the discount as per payment term. Vendor provided the first 10 days 5%, next 15 days 3%. So how system it will be calculate this discount means based on the baseline date. So here baseline date we mentioned document date, invoice date, transaction date, whatever the date we mentioned in baseline field, based on from that date onward, system it will calculate discount.
Okay, fine. On the asset accounting front, can you tell me what are the different ways to discard an asset from a company code?
Different ways to asset enter to the company, right? Right?
So, what are the different ways to discard an asset from a company code? To remove an asset from a company code?
Okay. So one is, once asset life cycle is complete, a lifetime is completed, then we can move the scrap, and before lifetime also if asset is not working, then we can remove the asset. And one more thing, asset we can sell the with customer we can sell the asset, and we can transfer the company asset with one company code to another company, and we can transfer the asset one company code within one company code, one business area to another business area. These and all scenarios, asset we can move, asset we can left from the company code.
Okay. And do you have some knowledge and hands-on in working with controlling?
So that's what last project only I involved controlling, so controlling area setups, creation, and the business transactions. What and all the business transactions it means. FI to CO, like COIN, RK1, RKP1, like business transactions. These and all configurations I involved. And coming to AFC settlement point of view also I involved. Like once user posts the transaction in the form of internal order, so by month ending or whatever the time, from internal order to AFC we can settle the asset, and from once AFC asset is finalized, then we can move the AFC to final asset. These and all the business process I have. Full-fledged configuration I didn't involve in my hands.
Okay, fine. Okay, Mohan, that's it from my side. If you have any queries, you can ask me.
Nothing, thank you.
Thank you very much.
Thank you so much.
Yeah.